asking tips on how to build a profitable trading strategy. So I think the real point when it comes to profitable trading strategy is that you have to test a lot of things out to see what doesn't work until you figure out what does. And a lot of times, especially as it pertains to trading, what you want to do is try a strategy and give it time to see if it's going to play out, right? So for me, that was basically Ichimoku for a long period of time. The edge setup and Kumo breakout are two of my, quote unquote, bread and butter setups that I like to really take in most trending environments. And here's the thing, right? I say trending environments because I realize Ichimoku works really well when we're trending and we catch these cool moves, right? Like the edge to edge and things like that. But what I've learned over the past several years, journaling and taking, L's to the face, is that it doesn't work well in range-bound environments. So, when you're putting together a profitable trading strategy, you need to know the limits of that strategy. And that could just be, well, Ichimoku is great for trending environments. If I can identify that the price is trending, right, with higher highs and higher lows or lower lows and lower highs, I want to pivot to a trending strategy. That would be Ichimoku for me. Now, when price is ranging, I realize that I'm getting chopped up a lot, right? Ichimoku is not that good at range-bound markets because it's a trending indicator. It captures up to 80% of a given trend. So when I noticed that, I had to kind of go back to the drawing board and figure out what type of strategy can I use to kind of still make money when price is not trending, right? So a lot of the times, price does range for the majority of the time. It trends for a shorter period of time. Obviously, in Bitcoin and the crypto markets, those trends tend to be overblown, and we kind of get nice moves from them. So there's good money to be made, but if you're trying to trade all different types of market environments, you have to adapt. This is where kind of liquidity theory came in. I'm happy to take questions on it, but I'll kind of give you the overarching point is that when price is range bound, right? I'll give you an example here. Let's see if I can just pull something up. So when price is range bound, right? And I'll go back to, for example, here. This is actually a pretty decent example. When price is in the tight range, we have a range high, range low, whatever you want to call it. Price just goes up and down, right? Ping-ponging within the range. So if we look back at Hyblock, I'm sure once we got to this retest at, let's say, what was it, 22.4, we had a lot of shorts come in, and that's what pushed us to the range lows. And then we kind of ping-ponged again. Now, when these shorts came in here, and here, all we were doing is building up short liquidity. So if we checked Hyblock, we would have seen that there was a lot of short clusters right up to 26.7 or 26.5. And that's kind of what you're looking for in a range-bound environment. You're looking for basically pain points where positions would puke, and you're trying to get tighter entries with tighter execution so you can kind of capture smaller trades, right? When you're trading a range, you can't be greedy. You can't go for the home run swing trade. That's just not how the market trends. So in a range-bound environment, you really have to adapt and take the smaller wins, right? So people that were in the Tools to Trade Telegram the past couple of days were taking some range-bound trades and kind of moving our stops and profit as quickly as we got them just because it made sense, right? When you're scalping, you need to go for quicker and more aggressive moves. Whereas if you're trending, you can be a little more risk averse and kind of wait for that trend to kind of materialize, right? So prices were at 20.3. We had this huge nuke, and then we had this further nuke. This was as good a spot as any, right, on this higher low to kind of get long. So at that point, yeah, that's kind of the gist of building a profitable trading strategy. You really have to take an approach, try it out, journal the outcomes, and then see what works and what doesn't, and then kind of start to dissect some rules for yourself, right? Like, so when I'm scalping ranges, I'm aggressive to move stops and profit as soon as I'm at profit. When I'm trading trends, I give myself more leeway for my thesis to play out, even if I suffer some drawdown in the beginning. So that's kind of my go-to for trading a profitable or creating a profitable trading strategy. Let's see what else we got.